there anything that you think could reverse the recent slide in the shares in the near term?
This Tesla stock analyst is actually pretty credible. His average return for Tesla stock is 68%. He was just on TV, so let's take a look right now. He says, do not buy Tesla stock, hold Tesla stock, meaning do not sell.
Wall Street is getting more and more bearish on Tesla after the company went through multiple rounds of price cuts, which ultimately hit its gross margins. Jefferies analyst Philippe Bourgeois is one of 7 analysts to downgrade the stock, and he joins us now. Philippe, great to have you here with us today. When you look through this most recent quarter for Tesla, dig into the numbers, and ultimately come out to the street, hey, something's going on here, not happy about it. What is alarming to you most about the company?
Well, I think there was, even though there was not the main scenario, there was a scenario that maybe Q1 would be the trough in margin, and from there we can see an improvement. I think what worried me a little bit is when the CFO who told us early March that there would be 20% gross margin, they missed by 1 point, all happened in the last few weeks of the quarter, and it seems like a lot of it seems to have been pricing. And we saw initially a lot of elasticity response to the price cuts, and it seems to have kind of softened as the quarter progressed. So there's a question mark still around though how responsive demand is to the price cuts that we're seeing right now.
I love Tesla, I love Elon, I love Zach, the CFO of Tesla, but I have to say that when Zach said, we are expecting 50% growth year over year overall still in Q3, and then we only got 40%, that did not help his credibility, but one time, whoops, everyone makes a mistake. But then Zach also guided for at least 20% gross margins for Q1. And, these came in under that. And yeah, going forward, definitely, I would be certainly quite a bit skeptical about any statements from Zach. But the thing that I love about the Tesla team, they learn, we adjust, they change their approach, and Zach has done the right thing and simply refused to give guidance about what's coming next because he realizes now he just doesn't really know for sure, and that is the right move, and for that, I respect him very much. And so on the flip side, you can also certainly say because he has learned from that mistake now, he's not going to give any guidance that is not going to be very accurate unless he really believes in that guidance. But if Zach does make another prediction, I will be a little bit more skeptical and I will certainly consider it, but I will not put as much weight on it as before. In the long term, I think he is going to turn out to actually be right. In the long run, I think the margins are going to come back to over 20%, but it may take a while.
If there is a demand problem, Philippe, it's Julie here. What is the demand problem? Is it competition? Is it just, that the Tesla's not as sexy as it once was? Like, what's going on there, do you think?
Yeah. Well, we think, part of the reason we decided to downgrade the stock is we look at the product is very, very impressive. Yes, there is competition, but there was always going to be competition. And as Musk confirmed, that we should be looking at Tesla as a market share progression in autos, not just the world of EVs, because they have to lose share in EVs, otherwise there's no EV transition.
Tesla's EV market share in the US is over 50% currently. Anyone who says that losing that market share in the US is a terrible thing and this is the end of Tesla is so disingenuous or is not very capable of thinking. Well, actually, everyone is capable of thinking. It is just that some people have such huge biases which are based on their emotions that it is difficult to see anything outside of that. And their views are polluted with a confirmation bias. Tesla's market share in Europe is at about 20% right now when it comes to BEVs, and in China it's a little bit under that. So these two we can talk about, but currently in the US, Tesla has roughly a 60% BEV market share, and then that number inevitably goes down to 50% eventually. Anyone who says that's a terrible thing, ignore them. They don't have objective views.
But I think I look at Tesla, so it's very much an engineering-driven, technology-driven firm, the way they operate, and maybe they've been a bit lighter or less competent in terms of thinking, what does it take to keep a consumer product alive? How do we manage transition? How do we widen the offer in a way, and how quickly do we bring in refresh of the models or new models to expand the range a little bit? And I think that as the market softens, we have more recession fears, affordability is a concern, then you've got a bit of an air gap, I guess, in the growth trajectory. of Tesla.
Look at this. I just went to Tesla's website and they are actually marketing. They did not have this video before. That's quite some emotion. I love this clip. I think it helps to have a higher conversion rate, probably higher order rate. But fundamentally still, what many people look at is, okay, what is the sticker price? 46,000, 47,000 really, with a $7,500 tax credit. Okay, it's 40,000 then. How much is a Toyota RAV4? Well, the MSRP starting price is 27,500. Of course, the Tesla vehicle is quite a bit better, but people first look at the sticker price and then they get the sticker shock. And if you look at the most expensive RAV4, it starts at about $37,000. So still a few $1,000s cheaper than the Model Y with a tax credit. But Matt, it is not fair to compare a Toyota with a Tesla because it's not a luxury vehicle. Well, most buyers are coming from Toyota when they switch to a Tesla. BMWs and Mercedes, not as many buyers are switching from these vehicles to Teslas. In the long run, fundamentally, to scale, what matters the most is affordability. And getting the next generation vehicle, of course, is going to help the most with that in the relatively short to medium term. And I think affordability is more important than refreshed vehicle versions. I mean, the Model S and X got refreshed, but the sales have not really increased. What matters more is affordability, I believe. Here's the history of a Model S and X pricing, and if you look back at 2021 and you compare these prices to current prices, the base models are about 10,000 more expensive than before, even after the refresh. Although Tesla said that their cost to produce these vehicles went down after the refresh. The refresh of a Model 3 is obviously coming, and we will find out exactly by how much more will demand go up once Tesla refreshes that vehicle. And then that debate is going to be a little bit more settled.
The CEO of Tesla, of course, pounding the pavement, and Elon Musk, and begging for one thing right now, even via Twitter openly, and it's for more lithium refineries to start up and more entrepreneurs to go into that instead of launching some new tech company. How much is lithium baked into even the bear case at Tesla right now?
Well, I mean, we saw a big spike in lithium, and it's been coming off. I guess one thing about the mining or refining is if you need more, you look for more and you invest more. So I think there's the risk on the lithium situation is not, as Musk said a number of times, it's not the sheer availability of the material, it's getting it in a process through a process that is manageable, that can be scaled up, and you are going to have probably mismatches in the timing of demand and availability. I think there was a spike in lithium as we kind of looked at an acceleration of EVs. There was a bit of a lag in supply. Now supply is improving, or the investment is improving. Lithium has edged. So I think we're going to see some volatility in the timing mismatch between supply and demand. That's to be expected on lithium, is to be expected in other materials as well, I think.
Anyone who thinks that lithium is a problem, that we don't have enough of it, is quite uninformed. You look at Tesla's master plan. Look, this is how much lithium we need, 20% of the total world's reserves. And you have to also understand what happens when we actually start to look for more reserves. The reserves go up. The lithium reserves went from about 1 or 2-ish roughly to about 8-ish or 9-ish. Clearly the reserves are going up because we look for more of them and we find more of these reserves. But even if we don't find any more, we already have more than enough.
You spoke a minute ago about broadening out the offering, right? And there was some anticipation maybe of a lower price vehicle coming at some point. Instead, it feels like we've heard more about the Cybertruck finally coming out. What are the stakes here for that lower price mass market offering from Tesla?
Yeah. Well, the first point I would make is first, I mean, what is unique about Tesla and very, very important, I think, is this model concentration, trying to get the maximum amount of market share out of a relatively concentrated product lineup, because that's the key to what I would call hyperscaling. if Tesla needs 100 models to gain 10% market share globally, well, it's the same thing as Volkswagen, and what's the point? So there's always going to be this work towards trying to maximize the volume of every model, but at the same time, they only operate in a small part of the market. So there are two things at work. There's need to expand the model lineup to cover more of the market, and there's need to maybe manage the life cycle of those products a bit better, and develop tools to basically have a smoother progression in growth and cash flow and earnings. And I mean, that's been kind of a weakness of Tesla, as they were focused on the product, on getting the product right, the engineering, the manufacturing, and they need to kind of maybe broaden a bit of their scale.
He actually made quite a few good and valid points. Another thing to really consider is which one is the most important. Is it more important to have long-term growth, where eventually you can certainly manage your cash flows and become profitable, but maybe before you get there, you will sacrifice all your profits for the sake of higher volume, and that will in turn lower your costs in the long term, and that will also strangle your competitors, making your profits in the long term actually higher. You can do that. Or you can try to balance the cash flows right now with the volume growth, and you can try to refresh the vehicles like he suggested earlier, and you can try to get the models out maybe a little bit sooner as well. But nothing is ever perfect. It just never works out like that. There's always something. So you have to prioritize. What do you want the most? For me, I want the most growth, and then later we can figure out, okay, what the margins are going to be and where exactly do we want to end up. What we know with certainty is that the costs to make EVs are going to keep coming down significantly, very materially over the next 10 years. That means that the Model Y and the Model 3 will become a lot less expensive over time. Keep that in mind.
Now, Cybertruck is coming. We still don't know how much that product is going to cost, and whether it's a $50,000 truck or a $100,000 truck will have a major impact, of course, on the volume, and hopefully we get more of that sometime in the third quarter.
Did he just say that it is better that Tesla sells a vehicle at a lower price instead of a higher price? How incredible! Because the vehicle has not been released yet. It is better, but if a car is already out there and if Tesla sells at a lower price, somehow that is criminal. Now, of course, if the costs to make the Model 3s and Ys came down a lot more, I don't think we would have much objection to Tesla really doing that, but in the long term, these costs will come down.
Yeah, Philippe, just quickly, is there anything that you think could reverse the recent slide in the shares in the near term?
Well, I think we need to see, at some the elasticity kind of respond, and we need to see the work. I think what's happening at Tesla is effectively they're growing. They need to, on our numbers, they need to grow 30% per annum to actually absorb the fixed costs they built up to make more cars. So for them right now, they're in a phase where they need to get that growth, because that avoids being the fixed cost being a headwind, and that volume growth also gives them an edge to reduce variable cost. But I think it's an ongoing process, and then of course the IRA subsidies will start kicking in and will help as well. But I think it's Tesla has always been about the affordability. For a while they were expensive cars, they were seen as premium cars. Their mission of Tesla is to make cars more affordable. So right now they're cutting a price, improve affordability. You need to get the cost to follow, and whether it's commodity cost or volume leverage, all that is going to contribute. We just don't know exactly when the trough will be, or when we start to be looking at upgrades to earnings as opposed to flat to down, which is right now the market sentiment.
It is not often you see an analyst who says, "Oh, this is a part of Tesla's mission, and therefore, but actually, yeah, it makes sense what we are doing." Very rare to see. So shout out to Philippe for that. Even though he did downgrade Tesla from buy to hold, but he's not saying sell Tesla stock, and this price target is just a short-term 1-year price target. And he said that in the long term, Tesla's story is largely still intact. He said that in one of his research notes earlier. I just posted an exclusive video on my Patreon account. This is so crazy. It's actually bullish for me. To all of my Patreon supporters, thank you very much. If you'd like to watch that video, click on the link in the description. It will take you to the page where you can do so. And this is a video that explains why the Tesla stock board members are now buying more Tesla stock. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.